Do you know why the whole world has to feed Americans? Why is the dollar collapses or the US goes bankrupt? We are more afraid than Americans themselves. It's because all the businesses we run globally, all the money we hold, it's US dollars. Just like in 2008 when the US crashed. Although the crash happened in America, but the whole world suffers from it. The US, however, recovered in less than a year. Because it can print money, the rest of the world cannot. So we'd rather turn a blind eye while they devalue the dollar frantically, letting US debt lose value, letting them print money and reap the world's wealth. We don't want him to go bankrupt. Now here's the question. All the experts and media are telling you the US government's biggest goal right now is to force the Fed to cut interest rates, right? Because the interest on US debt alone already exceeds military spending. If the rates come down, the US could fund another army, right? Logically makes sense? But the problem is, the Fed has cut rates now. Do you see US debt interest going down? Why does it seem welded in place, unchanging, sometimes even rising? In reality, after the Fed's rate cuts, US interest payments actually became higher and the inflation worsened, unemployment rose. So what does this mean? And the problem comes again. Recently, China secretly did an experiment. Everyone, what if the dollar and US debt collapsed and the rest of the world remained unaffected? What do you think this world is going to look like? Hello everyone, I'm Money Zen. The Chinese government quietly issued $4 billion in dollar-denominated bonds. Yes, you heard that right. China is borrowing dollars from the world. Buffett alone holds nearly $400 billion. But China borrowed only $4 billion. Does this mean China's economy is failing and it can't handle? So that means it has no choice but to go out and borrow money just to get by, right? Think about it. An ordinary person, will he borrow money from you and that money is just for covering the meals? He either is not taking cash with him or either he can't afford a meal. But you found out it's not like that. It has $3.2 trillion in foreign reserves and over $700 billion in US Treasuries. If they really needed money, selling some US Treasuries would give them plenty. So will China borrow $4 billion because it's broke? In other words, a country doesn't borrow money only when it's short on money. Otherwise, the US owes $38 trillion. Are they really short on money? Why are US Treasuries called risk-free assets? Because what the US government borrows from the world is the US dollar. And once the US can't repay, the Fed can just print dollars to cover it. So theoretically, lending to the US, you don't have to worry about default. And because of this, the US Treasury's credit rating has always been the highest. But China is different. They can only print Chinese yuan, but not US dollars. So if you lend dollars to China and they can't repay, they can't print dollars to pay you. That's why the dollar-denominated bonds that China issued are 3 levels lower than the US. So after hearing all this, if you have $4 billion, would you lend the money to China or the US? Logically, it's safer to lend to the US, right? But in the end, it turns out that China issued $4 billion denominated bonds, snapped up with $120 billion in dollar funds, rushing to buy frantically. And that's not even the key point. The point is, the interest rate for China's borrowing is nearly identical to US Treasuries. What does that mean? If China is not borrowing money, then what kind of financial experiment is this? Why did they do it in Hong Kong? Test the water in an international market. What are they trying to probe or calculate? What data are they collecting that could shake the world? Many people only think about how to make money. But have you ever noticed, even if you made the money, there are countless invisible ways it gets taken away? I'm not talking about spending it carelessly or paying stupid taxes. Even if you don't spend money, you're frugal, you save every penny, but the result will be the same. Your wealth will still buy less and less over time. Then here's the problem. If money keeps the cycle in earning and spending permanently, do you think you can just endure it and it'll pass? Do you still believe this global capitalist game of plunder and extraction has nothing to do with you? If you don't want to become a victim this time, or even wants to climb to a higher class, then you should subscribe to my channel, because I'm going to be giving you more information like this. And if you're worried you'll forget everything after hearing it, and you don't want to waste your time, you can like this video and it will be automatically saved in your playlist. So you can come back and follow it anytime. First, Why exactly did the Chinese government issue this $4 billion in dollar-denominated bonds? Let's look at the results. The result is this. Even though Chinese bonds credit rating is lower than the US, the interest China has to pay to borrow money is exactly the same as the US. What does this mean? All along, the interest on US Treasuries has been our standard for calculating whether an investment is worthwhile. Because, as I just said, US Treasuries are theoretically risk-free assets. That means if I invest in US Treasuries and just hold them until the US pays me back, I'll never lose money. More directly, I can mindlessly buy US Treasuries, and I still won't lose money. So, since the interest on mindlessly buying US Treasuries reached as high as 5% in the last few years, doesn't that mean if I don't buy US Treasuries and instead put my money into US stocks, gold, or Bitcoin, the returns I earn each year have to exceed 5% for it to be worth it? In other words, I can get 5% effortlessly. So if I rack my brain and take on risks to buy Bitcoin or US stocks, so doesn't that mean the return has to be higher than 5%? That is to say, the higher the return on US Treasuries, the less attractive other assets become in theory. And now, the return on US Treasuries is exactly the same as on Chinese Treasuries. But countless people are scrambling to buy Chinese Treasuries. China originally just wanted to borrow $4 billion, but over $120 billion is rushing to lend to China. Does that mean the market has voted through money without looking at the credit rating and starting to view Chinese Treasuries as safe assets on par with US Treasuries? Then, although Chinese government just wanted to borrow $4 billion, but over $120 billion is rushing to lend to China, what does this $120 billion mean? The US borrows about $500 billion in a single quarter, and this time, China could actually borrow away $120 billion. In other words, China used $4 billion to test the water and get data. It can snatch away 1/5 of the US Treasury's customers from the market because there's only so much money in the market. Either it invests in the US or in China. Got it? We've been saying for the past 2 years that US Treasuries have entered the bear market, meaning their prices have been plunging. Why do prices plunge? Because there are fewer buyers than sellers, of course. In other words, no one's buying US Treasuries right now, or they're even being dumped. And at this moment, China conducted this financial experiment and proved it can at least draw away $120 billion from the market. And these are confirmed buyers. So, doesn't that mean if China borrowed not $4 billion but $120 billion, it could make 1/5 fewer people buy US Treasuries? Wouldn't US Treasuries fall even harder? And then, wouldn't the interest rates the US has to pay to borrow money go even higher? Because if no one's lending me money, so I have to offer more interest to attract you to lend to me, right? Wouldn't that make the US government's annual spending even larger? In other words, doesn't this mean China has the ability to short US Treasuries? It's still that old saying, the banker of US Treasuries is the Federal Reserve. When US Treasuries are shorted, the Fed can still print money to step in and buy to act as the backstop. So shorting US Treasuries won't make them crash. But this has already proven one thing. The dollar cycle has been broken. All along, the US didn't have to do anything. Just print money and it could buy up the world's products. They buy South African diamonds, Vietnamese clothes. Then, once the money's spent, they have to find a way to get it back, then spend it again. So, the United States issues treasuries, borrowing money from the whole world to collect those spent dollars back. This way, they can keep spending without printing new money and continue buying the world's products. All America has to do is borrow more and more, using new debt to pay the interest on the old debt. To put it even more simply, the cycle is print money to create dollars, then spend them buying stuff. Borrow money to take the dollars back, and spend again buying stuff. But now, the money they spend can't be borrowed back. It might even be snatched away by China. In the end, will the United States be forced to just keep printing money for itself to spend? That would send the dollar down the same path as the yen, just getting cheaper and cheaper. And this is only the most superficial consequence. Everyone, was China really just borrowing money when it issued that $4 billion? We see, over the past 20 years, the biggest buyer of US Treasuries was China. But in recent years, China has been reducing its treasury holdings. A lot of people think reducing US Treasuries holdings means China is selling US Treasuries on the market. It's actually not. If the price of US Treasuries is $100, China held $1.3 trillion of them at its peak. If China sells all of that on the market to cash out, dump them massively, it would directly smash down the price of the US Treasuries. By the time it was sold, it might only have sold at $50. In other words, if China was selling a massive amount of US Treasuries on the market, it would be equivalent to dump the Treasuries cheaply, basically selling off the money our country has earned at a low price. Therefore, the so-called reduction in US Treasuries holdings is actually about not selling them. Instead, China waits for the Treasuries to mature. And when the US government pays back the money, China receives the cash and then simply stops buying new US Treasuries. So China's holding of US Treasuries will decrease, but this requires a long wait. If China lent money to the US for 30 years, it would have to wait 30 years for the US to repay. By that time, if the US dollar depreciates to be worthless, even if the US government repays the money returned to China will be worthless dollars. For example, a dollar that can currently buy 5 tons of oil might only buy 1 ton 30 years later. Then what to do? Simple. The solution has been found this time. Transfer the debt, then immediately collect the cash. What does this mean? First, China lent a lot of money to the US, but has to wait 30 years for the US to pay it back. If China doesn't want to wait that long, the only option is to sell the treasuries at a loss, right? But now, China borrows money from the rest of the world. For example, if the US owes China $4 billion, China then borrows $4 billion from the world. Thus, the world becomes China's creditor and China is America's creditor. Since China borrowed $4 billion from the world against the $4 billion the US owes, China has already collected the cash, right? And then, when the US repays China 30 years later, China will use that money to repay the world 30 years later. Isn't this equivalent to the US repaying the world? It's exactly the same as transferring the debt the US owes China to the rest of the world, isn't it? Yeah, China has already collected the money it lent to the US from the world. In this entire process, China did not dump a single US Treasury in the market and did not cause any market volatility. Therefore, China avoids taking a loss and successfully reduces its US Treasuries holdings. Currently, the annual interest the US government must pay is even higher than its military budget. And while the Federal Reserve cut interest rates last year, and again this year, you can see that the yield on the 10-year US Treasury has not come down. It remains around the 4% range. If we look at the shorter term, the 2-year Treasury yield hasn't fallen either. This means that despite the Fed cutting rates, the interest paid by the US government has not decreased. In fact, it has increased because the government has borrowed an additional $2 trillion. Logically, when the Fed cut rates, the interest you earn by keeping money in the bank goes down. So most people should take their money out and buy US Treasuries. With increased demand for treasuries, the US government wouldn't need to offer such high interest rates to borrow money, and the US Treasuries rates would fall accordingly. But why did this script fail this time? It's simple. Let's assume you take 1 million to buy 10 famous paintings this year. The average price per painting is 100,000, right? If you take 10 million to buy the same 10 paintings, the average price per painting becomes 1 million, right? First, if the money you hold increases, but the number of paintings remains 10, the price of the paintings will rise. Then, what if you take 1 million to buy 100 paintings? The average price per painting is only 10,000, right? Second, if the money you hold remains unchanged, but the number of paintings you buy increases, the price of the paintings will fall. This means that whether the price rises or falls depends not only on the quantity of itself, but also on the quantity of the currency. Everyone, if the US government wanted to minimize its interest expenditure, we must look at what the Fed did during the 2020 pandemic, right? Because back in the days, interest rates for both long-term and short-term treasuries were nearly 0%. In 2020, the Fed not only cut rates, but also engaged in quantitative easing. They printed $2 trillion in a few months, meaning the money supply in the market increased. At that time, the US government had only borrowed $23 trillion with no new treasuries issuance. In other words, the money supply increased. but the quantity of treasuries did not. The price of treasuries will soar, right? You'll find that the price of US Treasuries soared by 30% in just 2 months, and the interest rate was instantly suppressed to nearly 0%. But after the interest rate being suppressed to 0%, the interest rate starts soaring. Why? Because the US government started borrowing money continuously, going from $23 trillion to the current $38 trillion. $15 trillion of new US Treasuries has been issued in just over 5 years. This means the quantity of treasuries has increased, right? But has the money supply followed along? No! The Fed has been engaging in quantitative tightening, taking back $2.5 trillion. $2.5 trillion has vanished from the market. Therefore, for the past few years, the supply of treasuries has been continuously increasing, while the cash available in the market to buy treasuries has been continuously decreasing. This is the truth behind the plunging US Treasury prices, and the high interest rates can't be suppressed. So, if what those news reports are saying is really true, the US government truly wants to lower its Treasury interest expenses and borrow more debt at low rates, the first thing they should do is stop issuing new treasuries themselves, prevent the quantity from increasing. But they haven't. They issued an additional $2 trillion in a few months. Then, the second thing, let the Fed step in to do QE, increase the money supply in the market. But they haven't done this either. Even till now, the Fed has still not engaged in QE. So, actually, the US government just needs to stop issuing treasuries and wait for the Fed to print money to cut rates to 0%. They could resume borrowing at zero cost again, but they are not doing either of these things. What does this indicate? What the Fed did back then, they wouldn't do it now? The Fed chair is still Powell. The president of the US government is still Trump. This indicates that the US is facing an impossible trilemma, that it cannot solve a single one right now. First, to maintain government operations, the US must continue spending, but the money they spend every month is $200 billion more than they earned. The government has to spend all its earnings plus take out an additional $2 trillion from the Treasury's balance annually. Since the cash is insufficient, they must continuously borrow money to spend, and because of this, the quantity of the US Treasuries is certain to increase. All the government will shut down. So the US government borrowed extra $2 trillion in a few months. If they want to suppress US Treasuries interest rates, the Fed must do QE, and the amount of printed money must be several times the amount of US Treasuries issued. But in this way, the inflation will hit again, and the US dollar will depreciate frantically. And the consequence of it is to make the Fed ineffective, and in Fed's hand, the power to control will be completely surrendered. So the Fed is doing QT instead, pulled money back, rather than letting US dollars keep falling and inflation surging. It chooses to hold the power in hand temporarily. This is why US Treasuries are not selling out now. Here's the crucial one. If we look at this from another angle, there's another possibility, kind of conspiratorial though, which is China is borrowing money for the US under its own name. As mentioned, no one is buying US Treasuries now. Since the world is starting to stop lending money to the US, what about lending to China? China first borrows money from the world and then lends that money to the US. Isn't the result the same? The borrower is still the US and the payer is still the world. The only difference is an added guarantor in between. Doesn't that sound nonsense? Why would China be so generous as to help the US borrow money? Everyone, let's look at the details. China earns $1 trillion annually from trade with the world. So why does China only have $3 trillion in foreign exchange reserves now? Over the past decades, where did the tens of trillions of dollars it earned go? In previous years, US hiked rates. Many countries want to borrow US dollar because of no money. But the interest for borrowing US dollars is way too high. They can't handle it and they're close to bankruptcy. At that time, China lent its accumulated dollars to these dollar-deficient countries at low interest rates to prevent them from going bankrupt. If these countries couldn't repay in US dollars, they could repay in RMB. If they couldn't repay in RMB, they could repay with their own food or mineral resources. Simply put, China used its own US dollars to provide these countries with liquidity for emergency turnover, preventing their collapse. So, after hearing all this, have you got it? Traditionally, if the world wanted to borrow US dollars, they had to go to the US. If they wanted to invest dollars in a safe asset, they had to buy US Treasuries. But now, China's experiment is telling the world, you can actually come to China if you want to borrow US dollars. If you want to invest dollars in a safe asset, you can buy dollar-denominated bonds issued by China. In this entire process, the entire case, the world still uses the US dollar. But the person they go to is not the US, it's China. Will the US central bank still be the Fed in the future? This is the currency war. The condition for winning a currency war is who can control the currency? Who is the winner? In the past, currency wars involved trying to replace the US dollar with the Japanese yen or the euro as the world's currency. But every time it has been proven it's a failure. What about this time? Actually, no need to replace the US dollar. Just replace the Fed to gain control over the currency, isn't it? This is why the US stock market recently plunged. The US dollar and US Treasuries have entered a bear market. Bitcoin crashed. Gold and silver are barely rising. So the ultimate form of the currency war is no longer whose currency can replace the US dollar. But in the US dollar system, besides the Fed, who can become the new reliable rule setter and the core of liquidity? If you have a better understanding or better logic, welcome brothers and sisters who have a different opinion. Feel free to leave a comment down below to discuss with us. Due to time constraints, I have to end here. But what do you anticipate in the next episode? A lot of people are waiting for this line every week. It's gonna be a crucial one. Alright, I'll continue sharing tips on how to become wealthy, how to be an entrepreneur, an investor, and achieving financial freedom every Sunday at 8:30 p.m. If you don't want to miss out, make sure to subscribe to my channel and click the little bell and generously share this video. I sincerely wish all of you who like this video will reach financial freedom soon. As long as you can find 1 or 2 useful sentences in today's content that can help you live a better life, I'll be completely satisfied. Alright, I'll see you next week. Bye.